Bitcoin has no counterparty risk. It sounds counterintuitive, but it's the reality. And the reason why is because it has some properties that makes it designed to be that way. So thank you for joining me again. In today's episode, we're going to talk a little bit about that property that Bitcoin has that very few people actually understand, which is the fact that Bitcoin has no counterparty risk. So what is this all about? When you are investing in something where you're putting your dollars or your pesos or your currency into some vehicle that you think it's an asset, typically you need to evaluate the risks involved in this asset and the way in which it is custodied, in which it is regulated. So when you make your risk assessment about an asset, you need to understand that typically there's always somebody on the other end of the asset that represents risk. That's what is called counterparty risk. And it applies in most of our financial assets today. Let's start by thinking about a stock. So it doesn't matter how big, how well established, how robust or how great of a market a stock is into. You can think of Nvidia, you can think of Apple, you can think of some oil company, you can think of, Walmart. It doesn't matter. At the end of the day, you're dealing with counterparty risk because there is a group of people driving that company, driving the decisions that will make that company compete better or not, be profitable or not. You are always at the expense of a CEO not taking a good strategy for going digital, for expanding, for keeping things at a proper cost. So there is always some counterparty risk because it's not just a thing that is running on its own, it's a company with people involved. So that is what I mean by counterparty risk. And that is why in a stock, in your equities, within a portfolio, you need to assess what level of counterparty risk you're dealing with. Now, let's talk about some other asset class. For instance, real estate. Okay, real estate is a property, is something that you own, that you can live at, but is it really something that has no counterparty risk? Well, think about it, and the reality is that there is always the risk of your property being subject to some natural disaster, being subject to some taxes or regulations that get changed, to some international conflict or war, for it to be seized by the government or some, some bad group of people. And furthermore, you're dealing with a property that in order for you to demonstrate that it's yours, you need to have it in someone else's trust and custody for them to validate that you actually own that property. So that is your counterparty risk. What happens if your government says, well, you, because of your race or because of your beliefs or because of your age or because of whatever they think of, no longer are able as a citizen or as a human being to own property in our country because whatever. What do? Can you actually claim that property is yours? You did all this arrangement, all this registration, all those payments through a system that is already built with people and with people on the other end potentially impacting some decisions on how your property will behave in the future and the amount of risk that it has within it. So, okay, if real estate, if stocks are entities that have counterparty risk, let's think about some other thing. Maybe our current money, just dollars in and of themselves. So the dollars, fiat, paper money, if you hold it on your own, then it is called a bearer asset, meaning the person that holds it is the owner of that asset. If I give you, or if you find on the street $100 bill, is yours, and nobody can just appear out of nowhere and claim it as theirs, because the person who holds it, it's the person who owns it. That's the classification of a bearer asset, and something that basically functions as cash in this case. But what happens if your dollars are stored in a bank? If your dollars are invested somewhere, you're always in a financial institution, in a financial vehicle that if the bank goes belly up, if they say, hey, you're maybe engaging in some activities that we don't agree with or that we need to investigate, or maybe this looks suspicious, your funds are frozen. So that's why I'm saying if you hold the cash on your hands, then yes, it's something where you are bearing the asset itself. And in theory, it should have no counterparty risk. In reality, is that most likely those dollars are in a bank account, which means that you do have a counterparty risk on your financial institution. And secondly, if you actually think it through, the counterparty risk of a dollar is the fact that a dollar is an actual IOU from the Federal Reserve. The Federal Reserve, the central bank of the United States of America, has the ability of basically increasing or lowering interest rates, and also ultimately of printing money. And when it comes down to printing money, it means that you have the counterparty risk of Jerome Powell or whoever is running the Fed of basically saying, well, today your dollars are going to be worth a little less because now we're turning on the printing machine, we're stimulating the economy, we're basically lowering interest rates. The second that happens, your dollars are worth less. So what happens with Bitcoin, and why is it mentioned that Bitcoin is an asset with no counterparty risk? Well, this is an asset that is decentralized. It doesn't have any entity saying you can or cannot move your Bitcoin. So the custody, as long as you hold the keys for your public address that holds Bitcoin, you are holding a bearer asset as well. Whoever holds those keys has the power to move or do whatever that person wants with whatever amount of Bitcoin is held in that public address. So Bitcoin is a bearer asset. Whoever holds the keys is owning the asset itself. And secondly, Bitcoin doesn't need any permission for any transaction to be executed. Doesn't care about who you are, how much Bitcoin is involved in the transaction, what kind of job, nationality, skin color. It doesn't matter. It's code, and it's decentralized code that nobody can control. Rather, everyone needs to be in consensus for it to be in good shape, for it to keep doing what it's doing, and for it to just hum in a perfect beat of 10 minutes blocks that certify these transactions. So when you own Bitcoin, you are eliminating the other end of a CEO doing something fishy, of a marketing team running some campaign that is not meaningful. You're also basically investing in an asset that, being truly decentralized, has little to no competition. You may have heard about some stable coins, some other coins that want to compete with Bitcoin, XRP, I don't know, I won't mention them all, but the fact of the matter is that each and every one of those typically will have a CEO, typically will have a company that held a bunch of tokens, typically will have control over the future of that chain, of that token. That doesn't happen on Bitcoin. It is almost like a virus that has grown organically and nobody can stop. So that's the strength that Bitcoin has. It is a bearer asset where if you hold the keys, you have full control of your Bitcoin. You don't need permission from anyone to move it around or to do whatever the hell you want with it. And you don't need any custodian or anyone that protects it for you, because again, that is something that you can verify. It's public and everyone knows that what you claim is yours, if you hold the keys, is actually yours. In any case, hopefully this has been another interesting video for you. If you liked it, please like, share, subscribe, and I'll see you on the next one. Until then, bye.